to figure out which way we're going to go. So if you remember what we were talking about even on, even on Friday, right, was if we break, on Friday the plan was if we break Thursday's lows, right, we were going to go short. So, we ended up shorting pretty much all Friday, and it ended up being a good day. So, we're going to have kind of that same type of plan on Friday. What the fuck? Same type of plan going for, today. Now, the caveat is the market very rarely has more than 2 big down days in a row. I mean, you may trickle below, but we'll watch this. So I think today you may have a couple kind of double Lutsy fake outs here. Even if we open red, we may hold here because now we're starting to get a little bit oversold. If we start to take out some of these levels, then, we can put our long hats on. Right now it's pretty much a mixed open, so we won't know necessarily which way the market's going to go. Probabilities tell us that at this point we're getting closer to a bounce than the top in terms of a fade. So I've made a watch list for both, right? We want to have stocks that are both going to go long and short because you don't really know, right? Anybody that says they know what the market's going to do the next day is usually full of shit, right? It's you play what you see, and you've got to be, of course, have some level of anticipation, but you've got to be kind of reactive to what the overall market indices are going to do, and then follow your game plan accordingly, which is how we traded the chat room on Friday. It was a fairly easy day just in the life of, taking some easy, just some easy setups. Now, the open on Friday was really, really tricky. So this is where you guys, just grading some of the students' trades and stuff. I noticed a lot of people got stuck at the open. They missed the big trend in the market where the market flushed because at the open, they were getting way too in, right? Long, short, long, short, long, short. And then what ends up happening is you end up wasting too much mental capital. And then when the trend sets, because that's what you're waiting for, when the trend sets, that's when you want to really be taking, more risk on your trades and getting a little bit more aggressive with what you're trying to do. So that'll be our game plan for today. We'll watch these Friday lows. If we hold, we'll be looking for the long side, but we very well could just go red and kind of flush through here and then pop back. That open is going to be tricky because you're going to have a little bit of that long short action, so just be mindful of it. There's only a couple decent gappers on the list today. Out of all these earnings plays, there must have been some news in Brazil. I don't know if any of you guys are in Brazil or South America, but my whole watch list is just like Brazilian ETFs. So looks like there must have been some news out there because these things are just rampant. You can see the ETF for Brazil is up 24%. So most of the stocks that are really running around are South American stocks, which are definitely tradable, but they're hard to day trade because they just they gap a lot and then they lose their range. And so, I tend to take some of those off the list because, like stuff like this gold, I'm sure like it's gapping and it looks nice on the daily, but this can happen all the time on these kind of, when you trade what's called ADRs, which are just, right, foreign stocks in general. Most of them will just like gap and then sit around. So, I've eliminated those off the list for now because that's just going to be a little bit more tricky. We added this IGC on the list for potential bounce. Now, the problem with this thing is it's already rampant hard pre-market. It may lose some of its range. The reason is, look, when you get something that comes from 15 down to 4, it's crashed. The move is over. Everything that happens now after the initial primary move is what's called a dead cat bounce, meaning this thing is dead for life at this point. So if you're holding any, I feel bad for you, but it's going to be dead for life. Now, we're going to have some bounces along the way. It may run to 5 or 6 or 7 or 8, but most likely for this year and next year, like it's dead, right? It got pumped and then it crashed. And so now these are all dead cat bounces. So when you gap up like this, it's really tricky because you may get some pushes at the open. And you know what? The trend may even set and it may run for a while. But now that it's popped so much pre-market, you're getting kind of right back towards that 9 EMA at 6. And so that's going to be probably, where the main target could be on this thing if it holds, Now, granted, this thing's a huge turd and it's a smelly one. So you can't really hold this thing for more than, a handful of minutes anyways, right? And so you've got to trade this thing really fast. We'll keep an eye on this one for an ORB at the open. Now, granted, with IGC, I haven't had very much luck trading it on ORB. The better play has been to let it pop and then let it come back to the 9 EMA and start to round. So the better pattern on trading this type of thing is usually when you get like something more like this. Like see on NBEV, like you had that big gap, it was like 20%. And then, right, you came back down and you started to round. And when you rounded, you got that 9 EMA getting up closer. That's when you've got a much nicer push. That's a lower risk, higher probability trade. And so, that'll be the trade. If it does that on IGC today, where it pops and then kind of rounds out like that, that's when I'll be interested in it. But I won't be chasing it right off at the open because, frankly, I don't know if my fingers have the dexterity sometimes to move that fast. This PYX, 30, this 31 was the breakout spot. It's actually hitting the breakout right now. If you look at it, it's like kind of hourly chart. You can see, let's go, hold on here. Go to, right, you can see here, right, you got a nice, that's going to be your level right there. So you're kind of just peeking out over it. So the breakout spot's like 31. So you're right at that sweet spot. So this is something, too, that we'll look to possibly take on an ORB at the open. One thing to remember with this stock is that the spread on this is like hugely Gunnar. So when you get like a Gunnar spread like this, what you want to be doing, like you notice, like if you see how like it popped from the open, went from 24, 20, 26, and it looks all fine and dandy, and then it'll drop right all the way back, even below. So like a stock like this, it's better to kind of hit it on dips and trendline breaks because the spread's going to be on there. You want that range to really, really compress, right? You want this wide range to really compress, and when it compresses like that and you get those moving averages kind of curling up under it, that's when you can get some really nice pops in this thing. And it'll move like $3, $4, $5 probably today at some point up and down. The question will be, of course, does it have liquidity? Is the spread going to be Gunnar? And if you chase it, you could get smoked. So if you chase it up here, or even if you chase it on these kind of mini patterns, I think that, especially during midday, I think you're going to have a little bit of trouble in this thing. But like you could see, like then once it starts to shake out, it can go on a big run. So really be mindful of where your support and resistances are. Let the bases build, and that's going to make this a lot easier to trade on this. On the other side of things, look, when the market is like that, like this, the best thing to do sometimes is keep a handful of ETFs right on your watch list. You know what? I didn't know I had this ACBFF. Oh, is it out? All right, I'll put it on the list. You know what? It's got so many fucking letters in the name, I probably didn't even find it. We'll add it, because, yeah, you've seen us move on this one. So this looks like it's a new issue. It's got good volume on it. Good eye, Blake, my friend. We'll keep that on watch for the flag pattern. So like I was saying, when the market gets loose like this, what I want to do is keep a handful of ETFs to really, really kind of just trade the market. Because when the market has volatility, you don't necessarily need individual stocks. You can trade ETFs and you'll have the same thing. You know, our big trade on Friday was in this TVIX. So what TVIX does, guys, is when the market goes down, this one goes up, right? And so it's got a crazy good range. You know, it popped from 26.50 to 33 intraday. You know, we ended up taking the breakout on this in the chat room over here. So when the market goes down, I'll go to this as my bread and butter. So rather than having to short stocks, right, you can long this one and you can catch those big rips. And it's got good enough range. Even if you got a small account and you're ripping 200, 300 shares of something like this, when it's got that kind of range, you've got the potential to really make some good money on it. So keep this on the list. If you think the market's rolling over, you can go to good old TVIX and play this long to short the market. if the market does have a big bounce today, this TNA is your 3X ETF for small caps. So it mimics the small cap index, but then gives you a 3X move. So if the IWM moves 1%, this is going to move 3%. If the market's truly going to bounce today or the next couple days, the IWM will probably move 2-3% in a day or two. You'll have a nice move in this one. You can see this is what we call a classic breakout pullback. So you got this big move. You pulled back to this price support. You also got your 200 SMA there. You couple that with oversold stochastics, right? So anything under 20 on your stochastics indicates oversold. Anything under 10 indicates extreme oversold. So you've got like a really nice kind of 2 levels of support here that you can bounce. If the market starts to go, this will be my bread and butter to go to long, and then I'll use TVIX to short. I think that's the best way to do it. When the market gets nasty, what I essentially like to do is just pick high volume movers that can give me range. On the other side, this PayPal's looking really bouncy over here, right? You got 95 down to 83. You're also resting on its 200 SMA, oversold stochastics. See, this may even be, if you get a green candle to hold here, that actually will probably turn into a swing trade. You could turn it into a swing trade. Yes, NBEV everybody's been asking about, but I think it does probably need to tighten up here a little bit. You can see the 90 EMA still at 7. So, obviously if you had a day or two, like the 90 EMA would probably be in 2 days right here. It'd be considerably tighter. That's going to be a little bit easier to kind of trade this around. Remember that stocks trade back and forth between support and resistance. So when you have like a really loose range like this, then a stock will act choppy as stocks tend to ping pong around back and forth between support and resistance. But when the resistance and support converge and when they tighten, then that's when you get power, but that's also when you get that lack of choppiness. Choppiness comes from loose, but as things tighten up, they create explosion and they allow for better trends to emerge and set. And so that's where you've got to really be mindful of this. If they can go like that, then we're good to go. And NVIDIA is looking also bouncy from 298 to 269, sitting on a couple moving averages. And then this Costco, we had this on the watch list on Friday. It had a really nice trender on it. You can see this thing was really cruising down. You can already see this thing is kind of open and weak. If it busts through below yesterday's low, I think at that point you want to watch it for intraday setups. At that point you want to watch it for intraday setups and stuff like that. It'll be good to go because once it kind of cruises down, you can start taking ORBs and stuff like that. So that's it for now, folks. We got to go do what we got to do. Let's be good. Always, I've noticed, if you start Mondays off good, the rest of the week is good. If you're playing catch up on Monday, man, you feel like you're behind the 8 ball all damn day. That's the problem with having a shitty Monday. You're back under the 8 ball all week, and you're feeling that pressure to really kind of perform and get what's going down. So let's go do what we do. Let's go make it happen. As always, guys, you guys are welcome to come in our chat room. I trade live on screen share all day, and we're out there shredding it. Last week, we ended the week with a couple good days. Wednesday was nasty, but that's the nature of the game. But I'm live, and I've got my platform up, and I'm hitting these buttons, doing what I got to do. So anybody ever wants to learn in real time, you hit me up. You can always come to the Bulls on Wall Street chat room.